I welcome you for our fourth webinar that is being organized in collaboration with Bank of Valletta. I would like to thank, first of all, Joseph Rodgers, trained finance executive from Bank of Valletta, who will be the main speaker for today's event. The COVID-19 pandemic has brought about a change both in the way we do and experience things. When we first started the journey of doing these webinars, we were not sure how these sessions will turn out to be. However, as possible, despite the difficult times we have all experienced. We have decided to open up our events even to those who are not members of the Chamber. We have also decided to stream it live on our Facebook page, though those who will be seeing it there will not be able to interact with the session. Though you will not have the opportunity to interact verbally during the session, on the bottom right-hand corner of your screen, there is the comments box. Please feel free to post your questions and comments throughout the session. Joseph Rodgers will be able to answer your questions and concerns after his presentation, when we will be able to open the Q&A session. To this end, we hope that you will find this session useful. I now kindly invite our President, Joseph Borch, to make his introductory remarks.
Okay. Thank you, Daniel, for your introduction. Is it okay, Richard? Are you hearing me?
Yes, you can go.
Thank you, Daniel. Again, good morning, ladies and gentlemen. It is with pleasure that I welcome you again this morning for the fourth in our string of webinars. I thank all those that have shown interest in this webinar, be they members of the Chamber, the Gozo Business Chamber, and all our other guests. Again, as a Chamber, we have opened our doors to all. We have not restricted the participation to this webinar to our members. It is a principle that we have embraced during the COVID period because we believe that help, knowledge, and ideas should not have boundaries. Our last webinar, that on stress, with the participation of Dr. Anton Grech, was viewed literally by thousands. And from the feedback received, we know and can state with some satisfaction that it has contributed a lot towards the well-being of our members and friends. It was and still is being viewed both locally and abroad because the problems that we have gone through and are going through are not ours alone, but are universal. The universality of the problems we are facing now is felt even more on islands. Since our last webinar, the Gozo Business Chamber has participated in the Insular Annual General Assembly, Insular being the Association of Chambers of Commerce of the Islands of the European Union. This assembly was held over the internet. Islands, which like Gozo, mostly depend on tourism as the source of their economic well-being, have seen their income eroded and have been dealt a mortal blow. This is common to all islands, which have been the regions mostly hit by this pandemic. The Gozo Business Chamber during this meeting has been confirmed in the presidency of this association for another 2 years. And it will be our duty to coordinate the work of these chambers to help our businesses in these delicate times. Definitely not an easy task. Today's webinar is again another cooperative endeavor with Bank of Valletta in our strive to be of aid to our members. Trade finance is an important tool that will help businesses embark on a post-COVID strategy based on sound financial principles. It is my duty again to thank the bank for its help in organizing the team to be presented and to Mr. Joseph Rodgers for the presentation that he will be giving. Last but not least, I thank Daniel and Richard for the organization of this webinar. Daniel, at the end of this webinar, will be announcing a fifth one on a very interesting subject related to the post-COVID period. Make it a point to jot down the date in your calendar. I now leave the floor to Joseph Rodgers. Thank you and keep well.
Thank you, Joe Borch. Joseph Rodgers, you can switch on your camera and microphone, please. Yes. I can see you and your microphone.
Is it okay now?
Yes,
okay.
Yes, we can hear you.
Thank you very much. So good afternoon to all. Thanks, Mr. Borges, for your introduction, and many thanks, everyone, for joining us here. As correctly stated by Mr. Borges, I will be sharing my insights on 4 points, and hopefully you will find my input interesting and to your benefits. I will be very brief as much as possible, since the time is our enemy, as always, and I would like to have ample time for questions and answers. Obviously, in case of any clarifications whilst going through the discussion, please do not hesitate to stop me. So let's get going straight away. Sorry.
So you have to share your screen, the fourth icon, please.
Is it okay now?
Not yet. Okay. Yes, we can see you. You can carry on with the PowerPoint now.
So, PowerPoint. Is the PowerPoint on now?
Yes. It's
okay, thank you very much. So the 4 points that we shall be discussing are the following. Obligations and responsibilities of parties in commercial contracts, Incoterms 2020. Trade finance products might be the right panacea in overcoming cash flow challenges. Phantom transactions, and obviously the next one is the next step. Here, on the first point, the emphasis is to have a proper contract of sale to avoid any future legal disputes. So, it is important to have a proper commercial contract in place whereby the obligations and responsibility of all parties are clearly defined. In order to avoid possible future legal complications, which might turn out to be very costly, as you know, Incoterms 2020 rules are to be also incorporated in the contract of sale. However, Incoterms 2020 trade terms are not themselves a contract of sale. The documentation involved should be also in sync with the trade term agreed upon. The contract of sale should also include the following terms, amongst others: the identification of all the parties and their full legal powers, the purpose, obligation of the buyer to buy and for the seller to sell the goods and services, consideration, benefits that each party gets, exchange of goods, services of value for another, specifications of the goods and services sold, offer, that is the unit price, value of contract, the time of delivery, place, method of payment, acceptance, the applicable law, arbitration, court proceeding in case of dispute, penalties and liquidated damages in case of breach of contract, force majeure clause. This is very, very important clause, especially during the COVID-19. We have seen, for example, many Chinese declared force majeure during the COVID-19 in relation to a wide range of commodity trade contracts, and whereby with this clause they pulled out without any financial damages from their contracts. The effects of sanctions, cancellation, suspension, termination, contract effectiveness, validity of offer. Naturally, I'm not a lawyer and I'm not going to enter into the legal aspect of all these clauses. But my point here is to highlight the importance that in a commercial contract you should cover all these clauses. Above all, and from the banking point of view, Incoterms 2020 should be incorporated in each and every contract of sale. So probably most of you are saying, what are these famous Incoterms 2020? Just to put you in the picture, these Incoterms 2020, which were issued by the International Chamber of Commerce, they were issued on 1st January 2020. So actually, what are these Incoterms 2020? These are International Chamber of Commerce rules or trade terms for the use of domestic and international trade terms that explain the basic roles and responsibilities of both the buyer and the seller in commercial contracts for the sale and purchase of goods. Mainly Incoterms 2020, they cover the following three areas: the obligations, the risk, and the costs. So when we say obligations, what do we mean by obligations? That is the arrangement of the transport or documentation, customs clearance, insurance, so on and so forth. So who is obligated to arrange all these? Is it the buyer or the seller? The risk. What do we mean by risk? That is the when is the risk transferred from the seller to buyer? So when we say risk, what do we mean by risk? Risk is when there is that risk of the loss or damage to the goods. So if we are talking about selling of, I don't know, cars, selling and buying of cars, the risk is the loss or damage to the goods, to the cars. So here, the Incoterms 2020 go deeply into the risk. When does this risk is transferred from the seller to the buyer? And then another point, which is very important in the Incoterms 2020, it is the cost. Who is bearing the cost? Who is responsible for the cost? Who is responsible to pay the freight or the unloading of the goods or loading of the goods? So these are all very important points in the Incoterms, which, again, when we are signing any contract of sale, we should, in my opinion, know exactly what Incoterms 2020 are. Why? Because these apply for import and export and also for domestic sales. They facilitate the conduct of any global trade. Now, just to put you in the picture, there are only 11 Incoterms 2020. Probably some of you are saying only 11. Yes, there were 13 before, but now they went down to 11. And these are split into two. Trade terms that they apply for the sea and inward inland water transport, let's say for the sea shipment, and 7 trade terms that cover multi shipments, that is either land or sea or by air. So the first 4, they are maritime rules, that is for the sea and the land waterway transport. The first 4 are FAS, which is free alongside ship, FOB, free on board, CFR, cost and freight, CIF, cost, insurance, and freight. These are all intended for use where the seller places the goods on board alongside a vessel at a sea or a river point. Now we go on to cover the other 7. So first we cover the 4 trade terms covering goods shipped by sea. Now we cover the other 7, which cover any mode of transport. So these are ex-works, FCA, free carrier, CPT, carriage pay to, CIP, carriage and insurance pay to, delivered at place, DPU, delivered at place, unloaded, DDP, delivered duty paid. I'm sure that all of you will be saying, but should we know all these Incoterms? In my opinion, before you enter into any commercial contract, at least you should know that Incoterms exist. Before concluding, at least check that Incoterm you will be agreeing on, because by doing so, you will know exactly what are your obligations, what are the risks, where the risks are transferred, and who is paying and responsible for the cost. These might be very, very costly if you are entering into a commercial contract without knowing what the Incoterm 2020 is. For example, when we are talking about delivery means mainly that indicates where the loss or the damage to the goods passes from the seller to the buyer. That is very, very important to that point. These Incoterms go deeply to indicate exactly where the risk of the loss or damage to the goods passes from the seller to the buyer. Ex-works, FCA, DPU, DAP, DDP, FAS, and FOB, the named place indicates where the goods are delivered. That is where there is transferred from the seller to the buyer. So if we say DAP Marsa/Malta, that is where the risk is transferred from the seller to the buyer. Whereas CFR, CIF, CPT, and CIP, the named place indicates the destination to which the seller must organize and pay for the carriage of the goods, which is not, however, the place or port of delivery. Here later on, I will be giving an example because probably you are a little bit confused, saying here, one is saying the risk is transferred at one point. But on the other side is saying that at that point, the risk is not transferred. So I will give a very simple example later on. We keep on covering what Incoterms are. They do not deal with the transfer of property, title ownership of the goods sold. They do not replace the contract of sale, but become part of it when incorporated into it. Do not provide the law applicable to the contract. Reduce the risk of legal complications, which again might be very costly. They should be quoted correctly, such as CFR Marsa/Port Malta Incoterms 2020. Why I am insisting that it should be Incoterms 2020? Because before Incoterms 2020, we had Incoterms 2010. And there are certain differences between Incoterms 2010 and Incoterms 2020. So it's very, very important that we mention exactly the right Incoterm. That is CFR Marsa/Port Malta Incoterms 2020. Or, for example, CIF Jebel Ali Port Dubai UAE Incoterms 2020. Now, to give an example about the Incoterms 2020, here I'll just give you a simple example. Let's say we are talking about CFR Marsa/Port Malta Incoterms 2020. Let's say we have a Maltese or Gusitan importer importing, let's say furniture to Malta, let's say from Malaysia. And the Incoterm agreed upon is CFR Marsa/Port Malta Incoterms 2020. Exactly, what does it mean? CFR Marsa/Port Malta Incoterms 2020. The seller is responsible to deliver the goods to the buyer on board the vessel. So here we are talking about the risk. The risk of loss or damage to the goods passes to the buyer when, at that point, that the Malaysian supplier, Malaysian exporter, loads the furniture on the vessel at the port in Malaysia. So at that moment, the risk of loss or damage to the furniture passes from the seller to the Maltese, to the Gusitan importer. At that point, once the furniture is loaded on the vessel in Malaysian port. The obligation to arrange for shipment of goods from Malaysia to Marsa/Malta, clearing the goods from customs in Malaysia, obtaining documents such as bills of lading, so on and so forth, these are the obligations of the seller. Another point is that the costs involved. The cost of the seller is that, of course, the furniture themselves and to pay for the freight and loading of the furniture on the vessel in Malaysia, and pay the freight from Malaysia to Marsashloq port. So the obligations, and especially the obligations, stop in Malaysian port. However, the costs responsible to be paid by the seller, they go up to Marsashloq port, Malta. The misconception here is this, that if the cargo does not arrive at the port of destination, in our case, Marsashloq port, then the buyer has no obligation to pay, and the onus is on the buyer to ensure. And so here we insist that the onus on the buyer to insure the cargo, such as cargo marine insurance, it has to be by the buyer. So that misconception that if the goods do not arrive, the furniture does not arrive at Marsashloq port, then the importer is not obliged to pay to the supplier, that is unfortunate, that is wrong, because the Incoterm is CFR Marsashloq port. So here I advise that the importer should take an insurance policy to cover the marine and cargo risk. The seller, in this case, whether the goods arrive or no, has the right to get paid. I hope that this point is covered, because unfortunately many Maltese and Gazetans, they are a little bit confused about this point. They are thinking that since they are buying on CFR Marsashloq port, then they are happy that they will pay when the goods arrive actually in Marsashloq port. And the reality, the legality is no. The obligations of the buyer to pay is when the goods are loaded on the vessel, in this case, in Malaysian port. Now we cover the other point. The other point, which we are going to talk about, it's a little bit critical and factual, unfortunately, at the moment during this COVID-19. As all of you know, the financial people always insist that cash is king. Both the financial controller, accountants, so on and what have you. And this mantra became more evident in manifested manner during the COVID-19. Unfortunately, many business entities from broad spectrum of industries face cash flow challenges. And here, the aim is to remind you of the trade finance products that might be your panacea in boosting your cash flows. Such trade finance products are the following. Factoring. This can be done with or without recourse. What do we mean by factoring? I know these are bank's jargon, but let's talk in layman language. Factoring is one of the services of factoring is invoice discounting. That is, you are selling on open account, you are selling, for example, and you are giving 90 days credit to your buyers, and you have to wait for 90 days or probably even more to get paid from the buyer. So you have a trade receivable in your hand. That, of course, subject to terms and conditions, that trade receivable can be liquidated, can be converted into cash. We call that type of trade finance product invoice discounting, which falls under factoring. This can be done with or without recourse. What do we mean with or without recourse? With is that if the buyer, that is, the buyer is obliged to pay to the supplier and does not pay, and we have discounted that invoice, then our customer, who is the seller, will be obliged to set off that exposure. If it is without recourse, then yes, that can be off balance sheet financing, and if the buyer does not pay, then we will not revert to our customer, to the seller, to settle that exposure, because this is done without recourse. Of course, these are subject to terms and conditions. Now we have the other product, which is reverse factoring. Not many people know about this reverse factoring, but basically, again, in layman's language, it is basically a bank guaranteeing the payment to the supplier, or actually affecting payment to the supplier on behalf of the importer, who will be our customer, who will be our borrower. A point here, although this is a little bit too technical, I'm addressing here, if we have accountants with us, that this type of financing should not be treated as trade payables, but this is actually bank borrowing. Now, we move on to discounting of bills, documented credits, avalized drafts. Most of you, I'm sure you know that this is a plain vanilla trade finance product, whereby if you are receiving LCs or bills for collection, or even more avalized draft. What are avalized drafts? Avalized drafts are drafts that they have been guaranteed by a foreign bank or even by us. We can discount these proceeds under these trade finance products. So here, my point is this, that if you are exporting and if you want to give some credits to your buyers, then basically you can ask them, you can give them some incentive by telling them you can issue an LC in your favor, deferred payment, let's say 90 days or 180 days. Of course, you as an exporter, as a beneficiary of the trade finance, or of that documentary credit, you have to factor in the interest involved in receiving your money after, let's say, 90 days or 180 days. However, if we are the confirming bank or the negotiating bank under the documentary credit, then there is no need for you to wait for 90 days or 180 days to receive your funds. But we, as a bank, if the issuing bank is acceptable to us, then we can definitely discount your proceeds. That is, we can give you the money once the documents are fully compliant under the LC, and you can receive the money straight away without waiting for 90 days or 180 days. This can apply as well for bills for collection or avalized draft. Here, the issue is a little bit different, because here our exposure will be either on the buyer, not on the bank, or on avalized drafts, who will be avalizing, who will be guaranteeing those drafts. That is, exposure is shifted to a bank. Another trade finance product, which again, here I'm sure that you know about these products, back-to-back documentary credits and transferable. These apply when you are a middleman, you are buying and selling, and you are in a transaction whereby you want to, let's say, sell rice to Ghana, and this rice is coming, for example, from Thailand. So over here, you receive an LC from a buyer in Ghana, and against it, we as a bank, we will issue a back-to-back LC to the supplier in Thailand. Of course, when I'm saying we will issue subject to terms and conditions, for one of them is whether the issuing bank in Ghana is acceptable to Bank of Valletta. Another trade finance product is transferable, whereby the same LC that we receive, we transfer it to the supplier. Here, this applies, as I said earlier on, this applies to those trading companies acting as middle companies in certain transactions. And for these type of transactions, you don't need to have any cash margin, no collateral, nothing at all. The collateral that we will be taking basically is the documentary credit itself. The final trade finance product, amongst others, is the structured trade finance. This here, in a nutshell, what we do as a bank. As a bank, we finance the underlying goods, and we take those goods as collateral. Give you a simple example. You have received a purchase order, or you have agreed to sell certain products to, let's say, to company A, which is a very strong company, financially strong company. With that purchasing invoice that you have, with that purchasing order that you have in hand, we as a bank, we can give value to that purchase order by giving you a structured trade finance for you to supply those goods from the supplier. So if you are a middle company, let's say you want to sell masks, medical masks, to, let's say, to company A. The company A either issues a letter of credit or they issue a purchase order. Why I'm saying or? Because there are companies that they are strong enough, and probably they will bulldoze on you and telling you, we are a strong company, there is no need for us to issue a letter of credit. But with our purchase order, you can get financing. So we, as a bank, we can take that purchase order as our collateral to provide you with finance to deliver under that purchase order. Again, this is a loan settled from the sale proceeds, and we consider it as self-liquidating. Again, in these type of structured trade finance, our sole collateral is the underlying goods that we are financing. I know that I am rushing, but the time is our enemy, as always, so I'm trying to cover all these points. Now, we move on to point 3. This is a topic that unfortunately, during the COVID-19, we have seen so many phantom deals floating in the market. Probably all of you know that and probably you have seen many orders for ventilators, for masks, for any other medical equipment. We have seen, for example, companies that they are into the sugar business, and all of a sudden they became suppliers of medical ventilators. We have seen not one, but many, and involving millions of euros. But unfortunately, these were all fictitious transactions. So my advice here is that be careful before entering into commercial obligations. This slide here, what I'm talking about is that during the COVID-19, the number of fictitious transactions increased significantly in the market due to several factors such as greediness, we are all human beings, illegality such as money laundering, which is at Bank of Valletta, probably as all of you know, this is zero tolerance. Many companies, they were suffering from lack of sales, of course, no profits. They were not finding suppliers, so their supply chain was affected. Illiquidity issues and others. All these, unfortunately, led them to enter into such fictitious, such phantom transactions. My advice, but I'm sure that you know all these basic information, is that before you enter into any commercial obligation, make sure that it is legal and fully compliant with current regulations. Deal with parties you know, good track record, reputation in the market. They are in the same line of business of goods that you are dealing in. If you are, for example, buying sugar, then you should buy the sugar from companies that they are into sugar. During the COVID-19, as I said earlier on, we faced customers by telling us we have received this order to supply medical ventilators to company A. Can you finance us to purchase these medical ventilators from company B? When we have checked company B, they are lawyers, they are engineers. So a person with the right frame of mind should think that these lawyers, engineers, accountants, whatever they are not into the business of medical ventilators. Here, don't get me wrong, I'm not generalizing. I'm just giving you examples which I personally have faced during the COVID-19 when customers, they were a little bit irritated because they found BOV doors closed because, of course, we do not want to handle such fictitious transactions. We are here to help everyone, and even for our customers not to be involved into such transactions and even losing money. And of course, they are putting their reputation at risk. Again, so the point here is that they should be dealing with companies that they are in the same line of business of goods that they are dealing in. Does the transaction make commercial sense? Example, the price is too low. Is it too good to be true? I believe that I don't want to be negative because I'm a very positive person, but I don't think that many companies exist for no profit or charitable companies. So if the price is too low, check again. Is there something wrong? Is there something fishy? Don't be blinded by the profit, which at the end of the day will not be not generated. Do not deal with sanctioned parties, countries, ports, or goods. Here again, at BOV, we have zero tolerance to such transactions. So be careful before, for example, entering into contracts of sales with companies, for example, in the Middle East, for example, like Saudi, Kingdom of Saudi Arabia or UAE. These are countries close to Iran, which is, as you know, a sanctioned country. So be careful that the goods are not coming from Iran via Jebel Ali in Dubai, for example, or in Jeddah, Saudi. So make sure with whom you are dealing. Where are the goods coming from? All these so as not to put you in a position whereby once banks or other authorities, they get to know that you are dealing with sanctioned parties or countries or goods or ports, then of course you will be blacklisted, and of course you will be all the doors closed for future transactions. The final point, which is in my opinion is very, very important, like all the others, is that avoid paying in advance and opt to documentary bills or documentary credits. Unfortunately, I have seen this happening by many, let's say, but not many, few customers that they were blinded by profits and they succumbed to the pressure of the supplier because it was supplier's market, and they were forced by the suppliers to effect payment in advance. Payments were done in advance, and unfortunately, goods, they were never shipped, or goods shipped were not up to quality or not the right quantity. So my point here is that if you are under pressure, you don't know the supplier, please be careful. Don't enter into such transactions, and one of the obligations for you is to effect payment in advance. I suggest that this should be either via documentary bills or documentary credits. Why? It's very simple. Because under documentary bills or documentary credits, we as a bank, we will be helping you from A to Z, checking all these points that we have just discussed here. And the most important thing is that there should be a transport document. So over here with the transport document, we will get to know where the vessel has sailed, from which country she sailed, from which country she loaded the goods, and which port she will be unloading the goods. So here, and ultimately, the goods are shipped before a payment is effected. Probably some of you are saying, but okay, banks deal in goods, deal in documents, sorry, not in goods. Here I suggest an additional step. Before you ask the supplier to load the goods, appoint an inspection company which is agreed upon with the supplier. Should be a reputable inspection company, a neutral company, whereby this inspection company will inspect the goods before these goods are loaded. So over here, you have another peace of mind that first the goods are being checked and they are being shipped. Now, again, to cover this point here is this, that there were some few that, as I told you before, they unfortunately have entered into such phantom transactions. We got to know about this. These were not handled processed through us, but unfortunately we got to know from the market. These that they were due to excessive pressure to deliver. Some might have entered into these with phantom suppliers, with the consequences of financial losses, time wasting. They put the relationship with the bank in jeopardy, reputation at stake, and of course, unnecessary tension. My final advice on this point here is not to be blinded by unrealistic profits that are supposedly to be generated from sales, from sale proceeds of goods that fall outside your usual line of business. Stick to your business, and excel, or else make sure if you are entering into a new line of business, make sure that you have expertise handling such new business. Now, the last couple of minutes, we shall be discussing the aftermath of COVID-19, which, as you know, COVID-19 has disturbed everyone, even from business point of view. And banks, of course, we are not an exception to this case. What is the next step? I believe, as I told you before, I am a positive person. So I believe that in every cloud has its silver lining. So, and the impact of COVID-19 accelerated the need to move to digitalization world. What do I mean here? For example, during the COVID-19, and unfortunately in some countries it's still like this. Couriers were not operating in such countries. A case in point, for example, as might all of you know, Libya. Libya couriers at the moment they are not working, or if they are working in limited services. So over here, banks like us will have transactions that we had to we have received the documentation, including, for example, the bill of lading, and these documents, they had to be couriered to the issuing bank, whether it's domiciled in Libya or another country. Again, as I told you, that some couriers, they were not operating in certain countries. So we ended up having these documentation in our hands, and the importer is eagerly to receive such documentation, the bill of lading. There were cases that the goods were stranded at the port of destination, and the importer is waiting for these bills of lading to arrive. Again, we banks, we did not have any alternative to courier these documents to the issuing bank or to the importer. Why? For the obvious reason that couriers were not operating in such countries. And this is probably not many people will realize this. This is a very petty issue, but when it hits you, unfortunately, you will be facing some challenges. Why? Because your importer will be calling on you. Where is my transport document? Without the transport document, the goods cannot be released from the customs, and you have delivered, you have provided documentation to your bank, but your bank was not in a position to courier these documents, this bill of lading to the issuing bank, to the importer. And over here we have an issue. Now I go back with those clauses that I have described in the contract of sale. If you have that clause, like for example, force majeure clause over there, then you are covered. If you have put that force majeure clause in the contract. But if you haven't, then it's really a very gray area. We, as a bank, we are protected by UCP 600, Article 35. I don't want to enter into such legalities, but we, as a bank, we are protected. But we are not happy that we are protected, but we want our customers to be protected as well. So my point here, what I'm trying to emphasize on, is that before you enter into a commercial contract, please make sure that those clauses, those Incoterms that we have discussed earlier on, they are stipulated in the contract. Some of you, they might tell me, what we do normally, we receive a pro forma invoice, we agree, and the shipment is done. And this happened, and we never faced any issues. I agree with you. But unfortunately, when something hits the fan, then over there, then yes, you might be facing legal issues, even with counterparties that you have been dealing on. And the issue here is it's not a matter of trust or no between the parties, because both parties, both the seller, both the buyer, have honored their obligations. But for example, from the seller point of view, the seller has shipped the goods. From the buyer point of view, wants to pay, but did not receive the bills of lading for the buyer to get the goods from the customs. So over here, there is a gray area. And that gray area, in my opinion, we should be proactive. We should be using the COVID-19, and we stipulate the force majeure, even at least on the pro forma invoice. Again, I'll prefer that you have a proper commercial contract. Why? To avoid any future legal disputes. So I believe that now time has come for all parties, such as customs, shipping companies, freight forwarders, exporters, importers, banks, inspection companies, amongst others, to agree to start transacting via electronic documentation. If this electronic documentation was in place, then the issues during the COVID-19, the issues of couriering of documentation would not have been there. But why? Because the goods could have been released from the customs by electronic bill of lading. Unfortunately, this is not in place yet. So this is the right time for all the parties, including banks, including BOV, to start pushing for this electronic documentation. This will be the first step towards digitalization, where disputes related, as I said, related to bills of lading, inspection certificates, or guarantees will be kept to bare minimum. Unfortunately, at the moment, banks and fintechs are working in silos, and there is lack of standardization. What is happening at the moment is this, that there are these big banks, they are all working in silos, investing money in certain platforms, other banks investing in other certain platforms, and at the moment there is no united global effort to come up with blockchain technology as one platform for digitalization. So we consider us as we are one of the smaller banks, as Bank of Valletta. Then of course we have to follow what these big banks are doing. hopefully, once this one platform for digitalization is discovered and is set up, then I am sure that BOV will be entering into this digitalization world as soon as possible. The aim is to help our customers, as I explained earlier on. Ideally, we should have a scenario similar to SWIFT. As you know, today, like all these years, banks, we are communicating with each other via SWIFT. That is these MT760, MT700, MT103, MT400, whereby we are communicating between banks. So since this SWIFT methodology has worked, why? Because all banks agreed to become SWIFT members, then I believe that when it comes to digitalization, once we have this one platform, then we believe that this will be the way forward, similar to the SWIFT methodology. The benefits, probably all of you know, of this digitalization are basically, the basic ones are less paper, obviously leading to a greener world, promote visibility across all interested parties, it is much more secure, enable efficiencies and speed of transaction processes, eliminate the risk of loss of documents in transit, eliminate the need to courier the documents. Especially, as I said, during COVID-19, this was an issue. Or probably some of you might be saying, but what Bank of Valletta is doing at the moment? Are we, Bank of Valletta, lending a helping hand in this issue of digitalization? And here I agree with you that we, as Bank of Valletta, we should talk the talk and walk the walk in this matter too. So we have decided to embark on a magnitude project on issuing our guarantees in electronic format. I know this is a big change, especially for the local market, but I am sure that once all the stakeholders got to know the benefits of all this project, that I am sure everyone will be embracing this project. We have started discussing this matter with some of the stakeholders involved, and here I would like as well to set up a meeting with the Chamber of Commerce, both the Gozitan one and the Maltese one, to get them on board as well, because our target is to get all parties on board to have a successful project. The benefits, the main benefits of this magnitude project are the following: more efficiencies resulting in faster response time, elimination of the risk of misplacing loss of original guarantees. We have many instances where our customers, they come to us and telling us the beneficiary A, probably it's a government entity, they have lost the guarantee and they are imposing on us to issue another guarantee. And we, from our side, since at the moment till today, our guarantees, for the guarantees to be honored, they have to present the original guarantee. Over here, what we are saying is that for a guarantee to be claimed under, there is no need to have the original guarantee. So the issue of misplacement or loss of the original guarantee is no longer there. Again, the issue of storage. So physical storage space is no longer required. And this will be beneficial for our customers and even for the beneficiaries. Our customers are the applicants, the instructing parties of these guarantees, and beneficiaries, of course, they might be our customers as well. So here, what we are talking about, there is no need for us as the guarantor, for the applicant and for the beneficiary to file the original, the copy and the original guarantee in their files physically, because it will be electronically saved. It is, as I said earlier on, it is easier to claim. Why? Because there is no need to present the original guarantee. So there is no headache if a guarantee is misplaced or lost. So the beneficiary, it's easier for the beneficiary to claim. And even here, if we are talking about amendments of guarantees, over here with a simple electronic instructions, we can amend the LC. The instructions might be coming from the beneficiary asking us to ask the instructing party, the applicant, to authorize this extension, or it's coming vice versa from our customer to authorize us to extend the guarantee or to amend the guarantee. This can be done all electronically. So by doing so, we are saving time for our customers for not commuting around. So here we are going into the greener issues, whereby here no need for customers to submit the original bank guarantee to the beneficiaries, for example, to the local councils. This can be done electronically. Our aim is we will send, after we receive the instructions from our applicant to issue such bank guarantees, let's say to local council, we can do it all electronically. And we are saving time for our customers to basically to come twice to the bank, hand us the original instructions, and then they come again to basically to collect the original bank guarantee, and then they have to go to the local council or to another entity, to the beneficiary, to hand over this bank guarantee. With this electronic project, then basically all these issues will be all gone. Another point here is this, that again, as I said, we will be saving time, we will be saving costs to our customers and even to the beneficiaries, because we are doing this. We are saving them from, of course, from transporting issues, costs. And the other one is if they are sending these instructions via mail, especially the beneficiaries. Over here we are doing so electronically. So over here we are basically eliminating these costs by receiving these instructions electronically. I believe that with this project, which all of you know, probably all of you has one day or another has tapped our services in issuing such guarantees. So our plan that by the end of Q3 we will have this project up and running. It's not easy because we are dealing with beneficiaries that they have been dealing with original bank guarantees for hundreds of years, and so we are here trying to of course tackle the issue of culture, trying to this is cultural change. So over here, that's why we have started talking to stakeholders involved, and the first reaction is basically it's very, very positive, because when we have explained all these benefits, then they are seeing that this can be done. From my point, I think it's 1 o'clock. This was the time allowed for me to discuss all these points. I hope that I was not too technical or I used banking jargon, because my point is that I want all of you to perhaps follow and understand what I was trying to convey here.
Thank you.
So I leave
Joe.
Mr. Borch to handle and as a moderator, please.
So we will proceed to the Q&A. So I will stop the screen share. Can you stop sharing the screen, please, Joe Rodgers?
Yes, sure.
That's it. And now we will open the Q&A session. We already have 2 questions. So anyone who has questions regarding what this presentation or any other question to Joe Rodgers or to the Go-To Business Chamber, please write them down in the bottom right section of the screen. So we'll start with the first one from Joe Borch. There we are.
Yes, you have mentioned factoring and discounting. Whether the amounts that are transferred to the trader is the full amount transferred or percentage of the invoices, whether the charges involved. Yes. So thanks, Mr. Borch, for asking us this very interesting question. We are talking about, you have mentioned factoring and discounting. What are the amounts that are transferred to the trader? This is a point for discussion. Here, if we are talking, for example, about factoring and discounting, we can agree it's not one hard and fast rule for everyone. It depends who the buyer is. It depends the amounts we are talking about. It depends as well the tenor. So I am sure that we can discuss this and we can arrive to a certain percentage. But I'm talking about, let's say, from 75% onwards. What are the amounts that are transferred to the trader? As we said, from 75% onwards, then of course we can certainly discuss. What are the charges involved? Again, we are talking about here boosting the cash flow. So the main aim is to boost the cash flow. As regard charges, our charges are competitive. Again, the charges might vary. It depends, as I said before, what the risks are. What do I mean by the risk? Who is the buyer? If the buyer is company A with a very, very financial balance sheet, and then we have company B with a not so rosy balance sheet, then of course the charges will be reflecting the risks involved.
Okay, we pass to the next question from Daniel. Can you provide more details on how banks can assist in identifying phantom and illegal transactions?
Yes, thank you, Daniel. This is a very good question as well. Over here, we as Bank of Valletta, what we do, we check the commercial issue of the transaction. What do I mean? If for example, and I want to be, I'm shooting from my hip here. If we have a customer that is buying, coming to us to sell sugar to, for example, to Brazil and buying it from Cyprus, for example. We know that Cyprus does not produce sugar. We know Brazil exports sugar, not importing sugar. So that is one basic alarm that hey, the transaction does not make sense. We check the pricing. We, from our side, we check. We ask for the pro forma invoice of the purchasing and of the selling to check the profitability issue, whether the profits are too high, whether they are too low. What do I mean? Because we know, for example, in soft commodities, the percentage, the gross profit margin might be not more than 7 to 8%. So if we have companies that coming to us with a profit dealing in soft commodities whereby the gross profit margin is 15-20%, that is another alarm to us that there is something wrong. We check who the supplier is. Is the supplier in the same line of business? If we are talking, for example, of grains, for example, is the supplier into milling into grain, or it's the supplier is into cars, for example. So cars and grain, they are totally different business activities. We check again from which countries the goods are being shipped. If, for example, goods are being shipped from Sudan, or let's say from Iran, these are, of course, a no-no. And we will tell the customers straight away. Again, sometimes customers will tell us that the seller is telling us you have a proof of product. Again, proof of product does not exist. Why? Because if the supplier, this inverted commas supplier is telling our customer, yeah, you have a proof of product, I can send you a bag of cement, for example. It might be one, but it doesn't mean that that supplier is real. So yes, it's very, very important to check who the supplier is. We ask the customer as well if this is the first transaction with the supplier. If it is the first transaction, then we delve deeper. We ask the customer to ask the supplier to provide us with copies of bills of lading, bearing the names of the companies. We are not here to know who the shipping companies were, or so on and so forth. But we want to make sure that if our customer is dealing with supplier X, then supplier X has shipped, for example, grain before. So what we are asking for here is copies of bills of lading that manifest that supplier X has shipped grain before. And once we receive these bills of lading of previous shipment of supplier X, then of course we will check these bills of lading, the authentication of these bills of lading, to make sure that yes, supplier X has really shipped goods, grains in this case, before. So all these points we check. We have a checklist before we, as BOV, we enter into the transaction. I hope I have covered all the points, Danny.
Okay, so we'll go on to the next question. And that is from Elaine Camilleri.
Thanks, Elaine. Thank you for the session. Welcome. My question is, you mentioned BOV refers to issue guarantees in electronic format. Can you kindly provide more details on how this plan will be rolled out with the relevant stakeholders? Thanks. Thank you very much, Elaine, for this interesting question as well. Basically, we have started discussing this with the government entities. Why? Because most of our guarantees, as instructed by our customers, they are issued in favor of government entities. Here, I'm not disclosing anything, but most of you all know that if you are building, for example, a washroom or something, then probably MEPA will be asking you for a bank guarantee. Local council for bids or for performance guarantees, building regulations office, so on and so forth. I'm not referring only to government entities, but most of the government entities, they are the beneficiaries of such bank guarantees. So here we have started talking to the beneficiary, because at the end of the day, for these electronic guarantees to be successful, we have to have the approval of the beneficiary, because without the approval of the beneficiary, then of course we cannot start issuing electronic guarantees. We are tackling this point from the legal point of view, from GDR point of view, so from IT point of view, security point of view. For example, if we are issuing the electronic guarantee via email, we are sending it via email, there should be test case arrangements between the bank, the issuing bank, and the beneficiary to make sure that everything authentic and it's secured. So we have test keys. On the other hand, there are the test keys. So over there, we are making sure that there is security of our communication between the sender and the recipient. That is between, for example, BOV and the recipient. So we have started discussing these points. So again, we are tackling the issue from the legal point of view, because the way it is today is that guarantees, one of the paragraphs of the guarantee states that for a claim to be honored, then the original guarantee has to be presented to us. One of my questions is, if this bank guarantee is lost, then the guarantee is over. As it is today, it is over. The beneficiary cannot claim. So here, and then there is the distinguish between issuing electronic guarantee and the SWIFT. When we are issuing guarantees or counter guarantees via SWIFT format, then the issue of original guarantee does not come into place, because you don't need to present the original guarantee, because there is the SWIFT replacing the original bank guarantee. So here what I see is that when it comes to SWIFT, there is no need to present the original guarantees. But for the local guarantees, when I say guarantees via SWIFT, for example, MT760, we are issuing SWIFT to beneficiaries abroad, or to beneficiaries that they have a bank account with other banks locally. So we are issuing guarantees via SWIFT. When we are issuing such SWIFTs, bank guarantees via SWIFT, then there is no need to present the original guarantee. Here, when we are issuing guarantees to locally here, unfortunately, then yes, the beneficiary has to present the original guarantee. With this project, then there is no need to present the original guarantee. Here, I must take the point that I need to set up meetings with the Chamber of Commerce involved here, both the Guzidan and the Maltese, to get them on board as well. Perhaps we can discuss this issue as well, and they, from their side, they will discuss it with their members as well.
Okay, next question from Joe Birch again. Here you go.
Yes. Thank you, Mr. Borch, again for your question. Basically, we are talking about the electronic system of documentation goes through. What will happen to legalization and certification of documents? Is this something that can be integrated into the digitalization? And do you think that all countries will agree to such system? This is a tricky question, because at the moment, very few banks, when I say very few banks, 3-4 banks, big banks, worldwide banks, that they have started actually conducting their transaction digitally via blockchain. There will be time in the future, hopefully very soon, because of this COVID-19, then this accelerated this process to have one platform via blockchain technology, so that all the banks will be members to this platform. And then basically all these issues that correctly mentioned by Mr. Joseph Borch here, then yes, all those documents will be authentic through this let's say blockchain. Over here, when I say blockchain, all the parties involved in the transaction, they will have access to such blockchain transaction. If we are talking about legalization, for example, as Mr. Borch correctly stated, some of documents, like for example, certificate of origin, it needs to be legalized, for example, by some form of legalization by let's say some embassies here. Then, if the certificate of origin, for example, is one of the documents to be legalized, then in this blockchain technology, one of the parties involved will be the Chamber of Commerce. The other one will be the embassy. So over here, what we are talking about, all these parties that they are involved into the transaction, they will have access to this particular deal, of course, for them to bind, to authenticate, to approve such transaction. What we are talking about here, for example, shipping companies, inspection companies, Chamber of Commerce's, embassies, importer, banks, exporter. All of these, of course, there will be documentation in place with the approval in place from everyone. Once we are sure with the system, then everything comes into place. And do you think that all countries will agree to such system? I believe so, especially the European countries and even the Western world. I'm sure that all we agree to such system. Asia will follow suit. Third world countries, probably it takes a while for them to enter into this digitalization world for obvious reasons. But yes, once we have a very secure and integrated digitalization platform that I believe and the right legal infrastructure in place, then yes, as I told you, countries will agree to work to such system.
Okay, we have another question from Daniel Borch.
Thank you, Daniel. Can you elaborate further on how trade finance pro can assist in overcoming cash flow challenges? You also spoke of using the right Incoterms in the beginning of your presentation. How can it be assured that the right Incoterm is being utilized? A very good question here is this, that, and I'm talking from experience here. We have customers that, for example, they are shipping goods, let's say, from Italy on FCA Bari, Italy, Incoterms 2020. And they are pushing their supplier to present them with the bills of lading. Here, the supplier, rightly so, is insisting on our customer that the obligation of the supplier is not to present the bills of lading. Why? Because the Incoterm is free carrier, FCA Bari, Italy, Incoterms 2020. So over here, our customer should know that when entering into such contract of sale and the Incoterm agreed upon is FCA, then the documentation, the obligation of the supplier is not to prepare and hand over the bills of lading to our customer. The customer has to arrange for all the shipment, for all the freight, to collate the bills of lading from his or her side. So over there, the onus is on the importer and not on the supplier. Again, I emphasize here that we have to concentrate exactly when we are entering into commercial obligations. We should know exactly what the Incoterm, what are the risk, obligation, and costs involved related to that Incoterm. Now, as regards the cash flow challenges, as I explained earlier on, those products that I mentioned, they all help to boost the cash flow. For example, if we have middle companies that, of course, they are selling and buying, and they are receiving, for example, letters of credit, we, from our side, we can, if their supplier is insisting on a letter of credit, we will be issuing, we call it back-to-back, a letter of credit to the supplier. Over here, we are encouraging, we are financing our customer without our customer forking any money from his pocket or from her pocket. So over here, what we are talking about is a simple, for example, a simple back-to-back deal, receiving NLC from company A in for example, in London, and against it, our customer, who is a middle company, who is not the manufacturing company, then needs to issue a letter of credit because the supplier is asking for a letter of credit. Normally, as all of you know, if a customer is coming to a bank to issue a letter of credit, the bank has to cover that contingent liability behind the issuance of the letter of credit. And normally banks, they ask for collateral, either 100% cash margin or any other collateral. But there should be some form of security. In this case, if it is a case of back-to-back or a transferable letter of credit, we are not asking for any cash margin at all. As regards the other trade receivable financing under the form of factoring, under the form of reverse factoring, there again, we can agree to discount those trade receivables at a certain rate, at a certain percentage for that particular tenor, and of course depends on who the buyer is. If the buyer is company A, which has a rosy balance sheet, then of course we are of course interested to discount those proceeds. We are helping our customers, those especially the exporters, for them to get their money, to convert, to liquidate their trade receivables today instead of waiting for the funds to come after 90 days or 30 days, 60 days. By doing so, we believe there is mutual benefit. One, from our customers' point of view, we are telling our customers to basically to export more by giving more credits to their buyers abroad. And from the buyer's point of view, which are foreigners, they are entering into into contracts with our Maltese exporters because they are giving them those credits. And we, from our side, we are giving them the cash for them, of course, to enhance their cash flow. Other trade finance product which I have discussed earlier on is the structured trade finance. Again, in structured trade finance, we the lender, in this case it's Bank of Valletta, who will give value to the receivable. What is a receivable? What is the trade receivable? It might be a purchase contract. It might be a purchase pro forma invoice. It might be a contract. It might be a letter of credit. It might be a bill of exchange. All these we give value, and against we can provide finance to our customer to basically finance this deal. This is all subject, of course, to terms and conditions, and this is on uncommitted and transactional basis. That is for particular transaction. So what I'm talking about here is that we take the underlying goods that we are financing as our sole collateral. Once these goods are sold under that particular contract, then those sales proceeds will basically set off that limit. So we call this self-liquidating. And again, for such transaction, we don't need cash margin. Again, as I said, our collateral is purely the underlying goods.
Okay, so thank you very much, Joe Rodgers. If you have any other questions, but I don't think there's more. So I invite Daniel now to conclude this session, and I would like to thank you all for attending.
From my side, before Daniel concludes, I would like to thank everyone for the interest shown in this webinar. I hope that I was not too technical, and I hope that my message was very clear and conveyed to the right people. And I thank you all, Chamber of Commerce and attendees for this webinar. I thank you.
Thanks, Joseph, very much for your interesting presentation. We now come to the end of our webinar. I would like to thank you all for accepting our invitation to join us today. I sincerely hope that this webinar has been fruitful to all those who have participated. I would like to thank Joseph Rodgers again for his very interesting presentation on this topic, which especially during this post-COVID-19 times, especially when it comes to certain phantom transactions that can happen, it gave very interesting insights that can open the eyes of many. I'm happy to announce our 5th webinar for this year, Digitalization and Businesses, a post-COVID-19 scenario, which will happen on Friday, 3rd July at 11 hours. We will be organizing this webinar in collaboration with Bank of Valletta and Microsoft Malta. In its communication on its proposals related to the EU recovery package on the 27th May, the European Commission highlighted that our generational challenges are even more important now than before the crisis started. The COVID-19 pandemic has shown the necessity for businesses to shift their business model to a digital one. The scope of this webinar will be to examine the challenges for businesses in this scenario and possible solutions, both from payments, therefore we will have the banking perspective, but also from an operational perspective. Paris B.P. Saba, Territory Channel Manager for Microsoft for Cyprus and Malta, will be one of the main speakers during the event. To this end, I would like to invite you to continue following us on our webpage and Facebook page, as we will be announcing more details in the coming days and weeks. Thanks once again for joining us today. Be well, keep safe, and stay connected. Thanks very much.